Hello guys, hope that you're well. Welcome back to another market recap. So this is the daily for NASDAQ. So this is without any drawings. You can see we've had from literally the 1st of April, basically. We've just had a massive run up towards all-time highs. Amidst everything going on in the world, like the war, the not like fully war, but it isn't a war, not World War III though, but it's getting close to it. Even though Trump and them are trying to talk it down, but yeah, it's a weird time. I know in my previous recap, I marked out these lows right there, and then these lows, right? We spiked below these lows, and then we ran up. This was like caused the market to run up, is the lows right there. Now, from a daily chart, you can just see like we've had an inverse fair value gap, the daily touch into it right there. Check where we closed. They come back to quadrants of that wick, and then they run it up. So even from a daily chart side, you can see like you could have bought here if you were still like bullish after we took those lows, but I totally was not. I still was waiting for them to get that, especially with how the world is going. Like there's nothing bullish really, but we are doing bullish runs. It's crazy. So yeah, we've had that run up again, fair value gap, a run, and we haven't retraced since Monday on the 13th of April. So the whole week we've been up. So you can also see a clear TGIF setup that should have played out, but Friday was again just bullish. If you mark out Mondays, the 6th of April until that Friday here, that range, you will see that with Monday's week down, we tapped into the TGIF because we didn't do it on that Friday of the 10th. So I'm expecting the same. We've had this run up. It could spike back down with market open to TGIF. We'll mark and go into that chart right now. Let me just go to 50 minutes and enhance it here, and then put on the markings. So we are currently trading here. If I go to the hourly, guys will see it's just like flipping barcode at the moment. Big consolidation, which also means like this could be like a temporary top because we just broke all-time highs. So this could be like the temporary high just before we run down. This could be the best case where we open lower, especially with the news now. Again, Trump is saying this and that. From a technical side, we do have this sell side that was just left, just ran up. We have the untraded opening range gap. We didn't trade to the 50% consequent encroachment. We have the TGIF, right? TGIF is this high to Monday's low, and this is just below the sell side. So everything is dragging lower. So we have the opening range gap low from Friday that wasn't traded to opening consequent encroachment. So we could even see a full gap closure and then come to test into Thursday opening range gap. Or if they want to really be that type of guy, everybody that bought from Friday or from Thursday at opening, after it made the low, basically everybody from there, they can spike out, which will then on the daily is this daily fair value gap, which also, if you check 1, 2, 3, The third one took out all the buy side. So this is also a thing that we can look at, is for them to come back to the sell side, which is the daily fair value gap. So I wouldn't even be flipping mad if they come back to that, because that is what is currently in the, the technical side of the market, which on my side is the target. So it's all depending on what they want to do. We have two opening range gap lower, sell side, there's sell side, this sell side. We have TGIF. So I feel that we are most likely gonna see that happen, right? I don't think if they want to really go lower, this is also sell side that we can look at, this and that. But I don't think we are gonna, if we really go that lower, then we could maybe, if we inverse this daily fair value gap, we could see them run for sell side again, like run back down to this. That is so possible. It's really, I think this is such artificial pump. You just can't see anything bullish, but we are going bullish, Yeah, it all depends on how we open, or we can see it throughout Monday being hit, run down. So you could maybe have like a small opening range gap, or like a new week opening gap to right maybe to this sell side, but throughout the day you trade down and hit all my targets that I just mentioned. If we don't, then damn, I'm just wrong. But I think my possibility is kind of big. So yeah, even on ES, you can see them being. So we made inversion to lower end, right? We are currently chilling in this range. This fairly gap as well. So this. And then this inversion, right? And then if you want to connect it more, we can get the 50% of both of these. Alright, that's just breaking it down more, but we are currently in the upper side of these two gaps. Those are main, like, two main stuff to look at is, can we get below this 50-minute and stay below it? Like, body closure should be below these lows on the 50-minute. And then can we respect these? Maybe you can take these highs if you really want to, but essentially you want to leave that. We can leave that and drop. So market open base, or well, new week open, check if we can close or open below these lows. Then you can see the run down to these TGIF lows. So that is what I'm also looking at. Then on gold, we had this massive run up. I won't say massive, but on the daily, I don't know if I last mentioned that, but there's a volume imbalance there. That was the top. Whilst the liquidity swept with that run up, suspension block, there's a volume imbalance on that, and a volume imbalance on there, suspension block, and we traded through it. There, inversion, that wick, 50%, lower quadrant, run down. That was sell side, that was like a draw for market maker sub model, and this was the full market maker sub model hit. And then we actually ran down to this low as well. And you can even use this wick to go up again. You can see how we use it to go up. But yeah, again, low right there. That was, I think, a 1 hour fair value gap, or 4 hour if I'm not mistaken. Yeah, 4 hour with a sell side in it. So it's the only fair value gap that is movement. So it took out this high, right? And it's the only fair value gap in this range that has like good movement and that took out the buy side. Yes, there's a small fair value gap there, but it didn't take out these highs, did it? We ran up only that fair value gap and this inversion, right? But the thing is, do you want to take the fair value gap that is there, right? Or do you want to take the one that is just right of it, that took that sell side, just much bigger? I don't know if they respected it. I actually didn't. So yeah, there you have it. They tapped it. So it's a build up of two fair value gaps that took out, that got movement, inverse that fair value gap. It took out sell side there, right? And then this fair value gap, it was a build up, and then sell side in it. And then we tapped it, and then we had a great rejection. Fair value gap ran up, and it's just been pumping slowly up to the highs. So we can see most likely a high there of 5,600 again. It wouldn't be out of the books or out of the playing cards. But if we do show a bearishness, I would like to see them get above this, right? This fair value gap. They should on the file get above this aggressively. Not aggressively, but with confidence, and say, okay, we want to get above that fair value gap and go higher. If we don't, if we check on the daily, yes, these aren't going to match up now, but we can even anchor that to the daily. There's daily inversion. Check how we respected it. We came up, came back down, consequent encroachment respected, ran up. So if we can continue respecting this inversion on the daily and get above this 4 hourly, then it should be good. It should be good. Anything else I quickly want to go over? Don't think so. Maybe US dollar against ZAR. I know not a lot of people look at it, but it's a good market to look at, guys. So we made these lows. We tapped a monthly order block. That was the low, right? Ran up, came back down. We made these solid lows. I'm just going to remove that. We respected it there. Bodies. It's a daily wick, I think. Sell side, we left the sell side. Now, I taught you guys from also the previous stuff that this is engineered sell side liquidity, right? Don't forget that. Now, with what do we use with that? That is like a good draw on liquidity, especially if they leave it like this. So we went up, right? On the daily, I think it's just make sure. I think it's a weekly wick. Yeah, this wick, right? No, it's not that wick. Is it on the monthly? Yeah, it's a monthly premium wick, right? So we took the highs, ran down. This is your change of the state of delivery, and this is your rejection. Not a rejection block, but I like if they on that where the change of the state of delivery is. With this, if they break this and there's a good wick in that range, I'm using that. And they came back to it, right? So if I go to the daily, you guys can see even on the run down, we came back into it and left it buy side in that wick, in this wick, the monthly wick. Took it, right? But we are showing so much bearishness that they are just struggling to get above it. Then we flopped lower, this fair value gap. Check where the bodies are closing. You can't make that up. The bodies are just above it. The one body closed just above it, opens, drops. And then this order block, oh my days. Alright, this order block, check how they couldn't touch it as soon as we closed below it, right? Couldn't touch it, bearish. Drop, a massive drop. That is how much percent? That is a lot of percent, if you ask me. That's 3% drop in a span of a day. Okay, because we couldn't take that over order block, so it shows bearishness. This inversion that was used as a fair value gap to go lower or go higher, which was respected. It took a high, so it's a good fair value gap to hold in your chart. It took a high, right? It was used for buy side, so you can expect them, if the situation turns, you can still keep that on for the sell side of the curve. So they used it, tapped into it, fair value gap also tapped into, inside of, on the same level as the inversion. Check where we close. Now you can mark out that wick and see, okay, can we stay below the 50%? Yes, we did. We even stay below the 20, the lower quadrant. And that shows, again, bearishness. So we tapped a rundown. We took this day's high, I think. High 47017. 47, yeah. So this one took that buy side and then ran down. I don't like this closure though. The closure was in this fair value gap. Okay, so I would like them, right, to do the next day is get below. Okay, let me take that out so we can focus on this. On Monday or Tuesday, the next 2 days will be important. Is, can we get below consequent encroachment and stay there? Then we can see a 100% run to south side, the south side especially. And then if we clear these lows, we want to see again a run down with speed below this low. And then eventually on my ultimate draw is this low or this low. Yes, this is not a low, this is a previous high, but that is a draw. I can actually put it on there, which makes it, but I think it's on the monthly though. No, it's not on monthly. The thing is with this, it's a full gap closure, and sometimes they do the full gap closure and then return and go higher. Same with this, they could touch it there on this high, and then that is the one that makes it go higher again. But with how it looks, it's looking like a market maker sell model to which lows? These lows, and eventually maybe this, right? That is possible, very possible, because again, quickly note what is in here. It's untraded, untraded fair value gap, unfold. So you can have that as a target, and we can even say, okay, we can see, okay, they sell side here, hold up sell side, now engineered sell side liquidity, this, right? They didn't take this low, didn't take that low because they left that, and they left it with speed for a reason, for it to one day come back to that. Okay, I'll anchor it to this, okay? This, and then again this low and that low. See, it's not the same, it's going higher because this is the fair value gap and it was not touched. So again, engineered liquidity, they didn't tap that fair value gap. So what can we expect as a draw if they want to go lower? It's this area. I'm not going to force him to go this low. I'm not going to force him to go this low. I'm not going to force him to go flipping this low. Our draw is that and that, right? But again, if we can get below this week, no, so we can even mark it out like this. We can get below these quadrants and use it lower. We are seeing lower prices. That is just how it is. So I'm not going to force him to go these lows. Check that these bolt up lows, right? I'm not going to force him to go there. Untraded fair value gap, right? I'm not going to force him to go there, but the possibility is there, right? Check all these lows. I'm not going to force him to go there or this, right? But technically they won't go that low because a market is set to go higher most of the time. Again, this is a currency, so it's a bit different. So it's dollar against ZAR, South African rand. So it depends. We can see a rundown. It is 100% possible. Again, on the daily, we have this market maker sell model to these lows, right? Consolidation, first phase, second, that's the high. They tapped into this high, higher time frame period A, especially on the monthly. Ran down, fair value gap respected. Inversion, you use the sells, the buy side of the curve for the sell side of the curve. It was respected, so it's panning out a good, it's panning out to be a good market maker sell model. Again, on the weekly, also have that same situation. The consolidation, right? Is this consolidation? First run up, then we came back to consolidation, ran up again, top, ran down, respecting the sell side of the buy side of the curve the whole time, So it's possible. I'm not gonna say it's gonna happen now. Here's on the monthly consolidation, run up, run down. It's there. It is showing this, right? Took that eye, took that body eye. Where did we go? See, it's built up. So if we can close below this on the monthly, in the next 11 days, closure below this order block, we will see a rundown to these lows. It is 100% in the play. Anything else? Oil. Let's check oil. On the weekly, we have the opening range gap. I marked a lot of opening range gaps, but I took out of not opening range gaps, weekly opening, new week opening and new day opening gaps. But I removed most of them because it's so much in this range, right? Here is the most obvious one, and this one. We had a nice rundown. Buyer side, I think, was left. High is 113,635, 735. So this I did not take that high. So we have relative equal highs again. Engineered liquidity. Don't think that everything that Trump and them were saying is gonna stay. The war is not over, guys. They just closed the Strait of Hormuz again. It's this rundown, especially yesterday's rundown. It's all manipulated. So we are not maybe on. We might not even see this low right now. I could even see them leave this and leave these lows as a drawn liquidity later on. For my draw, guys can see. How did I draw this? Is there previous? Yeah. So this high to this high, right? Event horizon. I'll even add it. Event horizon. There. or you can do this event horizon there. That is also okay. So we have event horizon. Let me add the text on the right side. So we have event horizon at 118, right? So I'll put a line at 118, 493, 493, right? And then let's add it back to that. Let's say template. I don't have the event horizon. Okay, so I'll just add one, make it that. Event horizon 1, right? And then we have event horizon number 2 right there. So either one of these, but I think more of this guy, the guy I'm holding, but I'm just adding this for, you know, the sake of it. This, they will leave most likely, run up this, and then I can expect 139, and then a top. I don't want to really see it going higher because it might, but 148, that's my, well, I don't want to see it go really much higher. We can go 152, but yeah, then it's gonna be 2. Yes, gonna be crazy. But yeah, we have that. I think I cleared most of the market stuff. Again, it's not financial advice, just for your teaching, and then you can watch how price react to the levels I gave you or the draw that I gave you guys. I'm not taking trades on the long term on any of these, so do not think that I'm giving you a buy in, or like let's say go buy this now, go sell this now. I'm not that guy. I don't do that. So this is just for entertainment purposes and educational purposes. So use this, go look at how the market is reacting, and use your eyes and see how it is used. Again, thank you guys. I hope you guys enjoy the rest of your day. Be safe. And yeah, the war isn't over yet. Don't let your guard down. Okay guys, enjoy the rest of your day. Cheers.